With futures reversing course in the morning and shifting into positive territory on a headline saying that the U.S. and China are getting closer to agreeing on the amount of tariffs that would be rolled back in a possible Phase 1 trade agreement. Attention also turning to this week's numbers for ADP employment and, of course, Friday's big non-farm payrolls report. So let's bring in Bill Baruch, president at Blue Line Futures. And Bill, there is so much stuff going on right now. Do you believe that these markets should be higher right now, given the headlines that we have seen?
You know, I think the markets need to settle in. And yesterday's weakness, I was calling it a healthy correction, a very healthy correction. Now, there are some big levels, if we're talking technicals, down in the S&P and down in the NASDAQ. Let's call it 30-40 and about 80-80. 30-40 in the S&P, 80-80 in the NASDAQ. Those did not quite get pinged, but those are the levels that I think you're going to have a floor of support. Now, if a trade deal totally falls apart on a fundamental basis, I would imagine those levels get taken out. And that's where we're going to see a real more minor scale correction. That's where we can start calling it a correction. For now, this is a healthy consolidation. But now overhead on resistance, we have where we settled on Monday. And those levels, let's call it S&P about 31.15. That's going to be a little bit of a ceiling here in the session. If we can get out above there, I think President Trump has a press conference around 9:30 Central Time. If we can get out above about 31.15, then this whole correction or whole healthy move down is now totally neutralized.
All right, so I mean, we had the words from the horse's mouth, so to speak, from the administration, from President Trump himself, about the idea that we would pause. We're not in a rush to get a deal done. We could wait until after the election. Now, there are reports, source reporting, by the way, from within the administration about whether or not there could be a possible inching towards a Phase 1 trade agreement. Isn't this just noise all in the end? And should it all be taken into account? Should the markets be moving up or down regardless of what's happening with trade? Or is trade the main focus of investors right now?
Well, trade is the main focus for investors right now. I mean, we are at elevated levels. The earnings reports, I mean, they overall were great. They added a tailwind, but overall, we were looking at the December 15th tariffs. So when people talk about trade, that's one thing, but it's the December 15th tariffs that really matter right here, right now. If those get implemented, that's where we could see 5 to 10% move lower. That's where it's a correction. And I still think at that point, we're talking a healthy correction, but overall, that's what matters right now. And you use the word inching towards a deal, and that's really what we saw in the headlines so far today. Now, there are a couple pieces of legislation moving through the U.S. that have been causing tension. Obviously, the Hong Kong bill, the Xinjiang bill. There's different things that have caused tension out there. And if this is where things could escalate behind the scenes. Now, if that happens, we won't see that in the headlines as quick as we see things on trade. That's what you really want to try and understand more than anything right now. If things fall apart behind the scenes on a legislation stance, that's where things could potentially get ugly and then really hurt trade on the other side.
Bill, just a few moments left here, a few moments left, if you will. What goes on your shopping list sector-wise if these things do pull back?
You know, I think there's some real decent breakouts. I mean, it depends what kind of risk you want to take. Now, you can look at something like the SOX ETF with the chip makers. I mean, we're still in a breakout, arguably, above 225.
Gotcha.
Now, I like to avoid the idiosyncratic risk there. Until that level gets taken out, I like that. But really, if you're taking on less risk, the REITs, anything in the REITs is a great place to be right now.
Gotcha. Bill Baruch, thank you very much for those market thoughts. That does it for Worldwide Exchange. Squawk Box begins right now.